How many vendors does it take to meet all your organization's food needs? Just one. EasyCater, the workplace food platform that lets teams order from a huge variety of restaurants, over 100,000 nationwide, all through a single vendor. In addition to all that variety, EasyCater also gives you full visibility of your organization's food spend with invoicing, centralized reporting, and seamless integration with expense management systems, all on one platform. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
Every business has an ambition. PayPal Open is the platform designed to help you grow into yours. With business loans so you can expand and access to hundreds of millions of PayPal customers worldwide. And your customers can pay all the ways they want with PayPal, Venmo, Pay Later, and all major cards, so you can focus on scaling up. When it's time to get growing, there's one platform for all business. PayPal Open. Grow today at paypalopen.com. Loans subject to approval in available locations.
Hey, good drivers. Yeah, we're talking to you, the ones who don't speed, the ones who avoid those fender benders, and who always use their turn signal. Congratulations, you're a better driver, and that means you could get better rates with Root Insurance. It's time to stop paying for other people's bad driving habits. You know, like the ones who cut you off just to slam on their brakes. Or the lead foot speeding to work every day. With Root Insurance, you'll get a quote based primarily on your driving. Just download the Root app, drive around like you normally would for a couple of weeks, and boom, you'll get a quote that actually makes sense. It's that easy. Root, because better drivers deserve better rates. Download the Root app today and see how much you could save. That's Root Insurance. Terms and conditions apply. Subject to underwriting review. See root.com for details.
Bloomberg Audio Studios. Podcasts, radio, news.
This is a breaking news update from Bloomberg. Instant reaction and analysis from our 3,000 journalists and analysts around the world.
Tesla said it's moving forward with its robotaxi and affordable vehicle plans while reporting second quarter earnings that fell short of Wall Street's estimates. Adjusted earnings, 40 cents per share. That was just below the average analyst estimate. Revenue fell 12% to $22.5 billion. That was also lower than expectations and the sharpest decline in at least a decade. Gross margin, which is a measure of profitability, was higher than anticipated. Right now, shares down about 0.6%. Tesla did say many of its key initiatives remain on track, quote, despite a sustained uncertain macroeconomic environment resulting from shifting tariffs, unclear impacts and changes to fiscal policy and political sentiment. Let's bring in Bloomberg Intelligence Global Autos and Industrials Research Manager Steve Mann, joining us once again from New Jersey. You gave us a great preview earlier in the afternoon. Now we have the numbers. Anything surprise you?
Yeah, I think if you look at the stocks down after hours a bit, I think the most important thing there is they haven't given us enough visibility into the future, what their outlook is going to be. I mean, the numbers, they miss consensus, but if you kind of dig into it a little bit more and look under the cover, it's actually not bad. If you look at, automotive gross margin, excluding credits, it's actually 15%, better than last quarter of 12.5% and better than consensus estimates. And then if you look at free cash flow, the reason why it's down versus the first quarter is because they spent an extra $900 million on CapEx, which is not a bad thing given that they're launching the cheaper model and the cyber cap. So if you exclude that $900 million of additional CapEx, their free cash flow is actually over $1 billion, more than $660 million in the first quarter.
So that's good?
That's good. I mean, spending CapEx, given what their product launches are, is not a bad thing. They're investing into the future.
Right.
And look, they're also expanding internationally, right? They have, we've seen over the quarter improvement, higher sales in South Korea. They announced entry into India, and then they're launching the extended version of the Model Y in China. So So it's a good thing. But look, we do want to hear what Elon Musk has to say in terms of not just the robotaxi, but how are they going to face the headwind, the challenges we're seeing in the U.S. market, which is critical. It's their one of the largest market in their portfolio. So we'll have to hear more on the call.
How do you think Tesla's robotaxi stands up to the other autonomous vehicle solutions that are out there right now, namely Waymo?
Well, I think the market can be very big, especially in the U.S. If we're not talking internationally, there's definitely room for multiple players. My perspective is that Tesla is using an all-camera system. That actually gives them a greater flexibility and greater scalability with that system. Waymo and others use a combination of radars, lidars, and camera system. Cameras are just cheaper, right, to build, and and so it's a lot easier to scale, cheaper to scale for Tesla. So, but then again, I think the market's big enough. I think there's going to be users that want an all-camera system. I think there's going to be users that don't feel comfortable with that and want the redundancy of lidars. So, for example, Uber is partnering with Waymo.
So I got to go back to wait. All right. So I'm looking at the FA function on the Bloomberg, and we just talked about free cash flow. And so it's $146 million versus $664 million in the first quarter of 2025, right, as our live blog says, dropping 89%. And I know what you're saying about it's good that they're spending for the future, right? Because you said to us earlier that the best way to get to that 1.56 million unit delivery for the year, right? That's a consensus estimate, is that they've got to launch that cheaper vehicle, right? So they've got to bring stuff out. Yeah. Do we have to be worried though about that low number, or they're going to be fine?
Well, it's technical, right? It's that if free cash flow is over $1 billion, obviously the more the better. It is down.
Yeah.
Compared to a year ago, 2 years ago. But look, like if you look at the Model Y, if you look at the gross margin, excluding credits, it is up, right? That actually tells you that the new vehicle is likely, new Model Y is likely they're able to build it at a lower cost. The issue is, like I said in the preview, is they just don't have enough volume. Yeah. So if they can expand volume with the existing Model Y, not just in the U.S. but in the international markets, and as well as introduce the cheaper model, which is supposed to be built within the existing capacity, there could be a lot of upside, right? In terms of margin, in terms of free cash flow. So, it's really execution at the moment, and that's what we want to hear from Elon Musk. Mm-hmm. Where is the cheaper model? They said the production has started, initial production has started in June, but it could take some time, right, before they launch. They have to get all the kinks out. But you want to hear about India. India is a huge market, right? And where are they taking India? Definitely robotaxi is important, and then the cybercab. We need a little bit more details.
All right, details is certainly
near-term details. Near-term details.
Near-term details. All right, great setup. Right. Steve Mann, thank you so much. We're going to look forward to reading your research in the after hours and certainly into tomorrow's trade. Steve Mann, Bloomberg Intelligence Global Autos and Industrials Research Manager, joining us from BI headquarters in Princeton, New Jersey.
I want to go right now and bring in Ross Gerber. He's president and CEO of Gerber Kawasaki Wealth and Investment Management. As of the end of last year, had about $3.4 billion in assets under management. Longtime outspoken Tesla bull, more recently expressing concerns about the company, as he did 3 months ago after the last quarter earnings report. According to the Bloomberg terminal, Gerber Kawasaki still owns about $78 million worth of Tesla stock. Ross, good to have you with us this afternoon. What have you been doing to your Tesla position over the last quarter? Just before we get your take on the numbers.
We've been selling for years, and I continue to sell. We have so much stock, and we have a lot of clients that really believe in the Tesla story, and we've kept some stock, obviously, in our portfolios But in my ETF, I'm out of Tesla completely, out of my GK ETF, and it's mostly because the business is declining, and these earnings results continue to show that the business continues to decline, and in some kind of troubling ways. So as much as the previous guest is bullish on many of these things that Elon talks about, nobody wants to talk about the truth that nobody wants to buy Elon's products. Like, until that gets addressed, there's a huge elephant in the room that nobody seems to want to point at because it's Elon. And so he's the innovator behind all of the things that are great about Tesla, but he's also the sort of villain that's created so much animosity around him that nobody wants to buy his products.
We've got a great cover story by the team of Max Chafkin and Ed Ludlow in Bloomberg Business Week, the new issue coming out, the August issue. It'll soon be on newsstands. It's already on the Bloomberg. But, the whole idea, Ross, as you know, since you understand this guy, this company so well, you never kind of count Elon out. And so I do wonder, if he does get it right, if he maybe, I don't know, we'll see what happens in terms of his involvement in politics, because it does seem like he still wants to stay, according to the SpaceX filing. But I mean, there is always that caveat when it comes to Elon, right? That he sometimes pulls it out, or he often pulls it out.
Yeah, and I think that's been true in the past, and I'm very grateful that he pulled it out 5 years ago when it really mattered, and Tesla was almost on the verge of bankruptcy, and it has become a very successful company. But it doesn't mean he's going to do it again. And this idea that, these kind of entrepreneur, rock star people don't fall is actually is not true. In fact, it's very common to what we call the rise and fall story. That's all the stories you see on Netflix and the documentaries. So, this might be a rise and fall story, and things don't rise forever, per se. And I always remind people, I don't think most people even know who invented the television, but the television was invented in the United States by a company called RCA, which was like the hottest stock of the 50s. Mm-hmm. Well, how many TVs are made in the United States today? And the answer is zero. So the very same thing could happen in the EV business. But that said, Elon can fix the company. It's solely broken because of him. He can certainly fix the company if he wants to do what's necessary to improve his image. And in a year, people forget, and Tesla might be back. But he just doesn't seem to care about fixing his image, and he doesn't seem to be in understanding the responsibility goes to him on why sales are down so much.
So why even have any Tesla stock right now?
I think the reason I hold personally still some Tesla stock is for the same hope that we all have, that they are definitely focused on a future. And especially for me, a climate activist, it's a green future that I'm pushing. And Tesla still is the leader in green, transportation and energy. And I think it's an incredibly important company to succeed. Hence why I'm out here banging on Elon all the time. It's not, for any other reason than wanting to see Tesla succeed, because it's crucially important to climate change. But this robotaxi business is not crucially important to anybody. So, I think Tesla's main business is selling EVs and energy storage, and they should be focused on repairing that main business. And I think their other future endeavors are interesting, and that's why it's a reason to hold the stock. But it also trades at 150 times earnings that are going down.
Okay.
And so, you have to weigh that too.
In the past, you've talked about how nice it is to drive a Rivian, for example. Are you willing to now invest in any other EV company that you've turned on Tesla?
No, I've lost a lot of money in EV businesses over the last 5 years that I've hoped would succeed, and including Rivian and many others. And unfortunately, many of the EV operators are now having all the incentives taken away from them, as well as traditional car companies, along with tariffs and everything else. It's just really a horrible setup to be a car company. The car company we own is Ferrari, actually, which has no problem selling their cars at 40% margins that make Tesla look like chump change. So, truthfully, it's just a tough to be in a global auto business on a great day, let alone with Trump as president. So it's a very tough time for the businesses, and I'm just not recommending that right now, versus a stock like Train Technology that makes, clean energy air conditioning units, where the demand for air conditioning is off the charts. And And that's been a wonderful green energy investment, along with GE Vernova, which we also own. That's been a wonderful green energy investment, but it's not EVs.
Hey, listen, I do want to go back to, we've got the Tesla Live blog going on and just tracking everything that's coming out of the earnings. Ardana Hull, who covers Tesla and Elon, says page 12 of the shareholder deck shows the Tesla ecosystem, which includes Optimus, we know the robot, pushing a baby stroller. You know, Ross, when it comes to Tesla and the world of Elon, there are so many different moving parts. There's, the shining beacon of SpaceX, right? That's a really great business. There's all the AI stuff that's going on. There's so many different moving pieces. What else do you want to know, from the Elon universe?
Well, I think the most important thing in my mind that has the biggest opportunity to help Tesla is this low-cost vehicle they keep talking about. They have so much excess capacity in their factories now because they're not selling more cars that they need a new vehicle. And also for addressing other markets, whether it be India, China, and Europe, you need a small vehicle that's inexpensive to compete against the other EV players and regular traditional car companies. And they need to do this now. And the sooner they do this, the better. And that's the most important thing. I know we like to talk about the day a robot is pushing my kid around in a stroller, but that day is long in the tooth from coming. Nor does anybody in the world would trust some big robot made by Elon Musk.
Ross Gerber, always appreciate you finding time for us.
For enterprise organizations, managing all your food needs is a tall order. But with EasyCater, you get a single workplace food vendor with the tools and resources to make it easy, giving teams across your organization an easy way to order from a huge variety of restaurants, all on one platform. All while consolidating your corporate food spend so you can control costs, streamline billing and payment, and simplify reporting. EasyCater, your business tool for food. To learn more, visit easycater.com/podcast.
Bloomberg Daybreak is your best way to get informed first thing in the morning, right in your podcast feed. Hi, I'm Karen Moscow.
And I'm Nathan Hager. Each morning, we're up early putting together the latest episode of Bloomberg Daybreak U.S. Edition. It's your daily 15-minute podcast on the latest in global news, politics, and international relations.
What's special about Bloomberg Daybreak is the immediacy of the news we bring you each day in your podcast feed by 6 a.m. Eastern Time.
This isn't a deep dive on yesterday's news. Instead, you get the latest stories with context.
And that's something you don't get from other news podcasts. So join us for the best from Bloomberg's 3,000 journalists and analysts around the world, with reporting backed by data and journalists at the center of the stories we cover.
Listen to the Bloomberg Daybreak U.S. Edition podcast each morning for the stories that matter with the context you need.
Find us on Apple, Spotify, or anywhere you listen.